Hello and welcome to Simply inTAXicating. In our first episode on black money, which we discussed before the bill was tabled in the parliament, various dimensions of black money issue India has been confronting with for quite some time. Today we are going to take up the insightful analysis of the finer aspects of the black money bill, which was tabled by the Honorable Finance Minister Mr. Jaitley last Thursday. We have several experts in the studio to give you those wonderful spectrum of views on this black money bill. We have Mr. M C Joshi, the former chairman of the Central Board of Direct Taxes and also the chairman who headed the black money committee which was set up by the then finance minister Mr. Pranab Mukherjee. We have Mr. Anshuman Tiwari, a seasoned journalist, so that he is going to give us a much wider aspect of the black money issue. We have Mr. Tapas Misra, a very noted exponent of law, of course, lawyer by profession. We have Mr. Somesh Arora, a very successful advocate and former commissioner of Central Excise and Customs. So, to start with, I would like to know that you have gone through the bill. To what extent this bill was really required? And the IT Act was not sufficient to deal with this issue.
See, the black money bill has been tabled in the parliament, as we all know, and you have pointed out. Now, the circumstances under which it has been tabled, we have to go back a little bit to understand. Firstly, I would like to mention to the audience that in round about 2010-11, if you remember, there was a lot of agitation about black money being stashed abroad. It became a public issue, public debate. Ultimately, there was agitation and it was debated in parliament, where the Honorable Finance Minister at that time, Mr. Pranab Mukherjee, mentioned that the department would bring about a white paper on black money. Thereafter, the white paper on black money was tabled in the parliament. Now, that report was tabled, which actually showed the genesis or the basis for generation of black money. And at that point of time, the opposition and the government were entangled in this issue that something should be done about black money being brought back into India. And as a result of that, the present government has thought it fit to bring about a legislation which, according to the government, will help in bringing back the black money which is stashed away abroad. Nobody knows the quantum. We do not know what was the result of various reports put up earlier. So that is the issue at the moment, and under the circumstances under which the law has been formulated. Now, of course, you can carry on and...
Right, sir, correct. So, now the question is, the objective is to bring back, recover the Indian money lost to tax havens. Maybe we will have a legal dimension to this. So let's go to Mr. Tapas Misra. Sir, please tell us, what is your gut feeling? To what extent this bill, which is going to run parallel to the IT Act, these two acts, to what extent these two acts are going to satisfy the common expectations in the country that finally this BJP government or NDA government is going to recover at least a part of the black money lost?
Let me sum up my views. You started with my gut feeling. My first gut feeling, the way the bill is drafted and presented, it is like a student hurriedly submitting a report to the class because he was being taunted by other people for being delayed. Because these are just provisions lifted from the Income Tax Act, clubbed together and presented as a new legislation before the parliament. If you allow me to briefly run through the provisions, if you look at them.
At least the major ones.
The major ones. Yes. The major difference is that the government is now enabled to bring to tax black money which has come to notice of an assessing officer in a tax proceeding or by any other authority in any other proceeding without any time limit. So, the point of taxation, the period of taxation is when the black money comes to notice of the assessing officer under this act. So, it gets taxed in that year and there is no limitation period. There is a limited window of kind of amnesty, limited amnesty offer. If people come clean at the first stage itself, then there is a 60% cost, 30% tax and 100% penalty. So, that is all. Now, all this could be achieved by making, as we were discussing, perhaps 5 or 6 amendments to the existing provisions of the Income Tax Act. Now, we have a parallel Income Tax Act kind of a provision, which adopts all the income tax authorities under the Act, adopts the same appeal procedure, adopts the same further appeals to the later stages. Everything is there, tax recovery and all. The only thing is that for tax recovery purpose, the government can negotiate with the countries and perhaps try and make a limited treaty to recover the black money abroad. What disappointed me that there is nothing in this law which really enables or strengthens the apparatus to go and discover black money.
We will come to that aspect. So let's go quickly to Mr. Somesh Arora, who is going to tell us that what are the key features which you looked at in this bill.
See how I feel about it. It's a lip service rendered to the cause of black money. Isn't much. You are admitting that you will not be able to bring back all of the money, so you are depending upon people, giving them a amnesty scheme, call them by whatever name. And you are ultimately relying upon the people only that, okay, you bring your money, otherwise we're going to have a very stringent measures. You are raising the sentence from 7 years to 10 years, owners of proof shifting on the other side, and amnesty scheme to run for a while, in which you are permitting them to bring back money, amnesty under various other legislation. There again, there is a point, you're covering 3-4 legislations only, Income Tax Act, Companies Act. If you make a self-declaration, it will not be used as evidence against you under Customs Act, Income Tax Act, Companies Act and FAMA. Right. But what about various other legislations like Central Excise, or you are going to run along with money laundering now because you've amended it. So money laundering is going to be a parallel offense. What are you going to do about that?
By another point, one of the panelists earlier pointed out that the difference between what is there earlier and now that you brought this legislation. Now, it's important to know that, of course. See, there are 2-3 differences. As he said rightly, it could have been done in the Income Tax Act also, because the other provisions are procedural and how they have to collect the tax and appellate authorities, ITAT and all that. Now, here the main issue is, in the case of this act is, here there is prosecution, which was there earlier also in the Income Tax Act 1961. Of course, 7 years rigorous imprisonment. Here it is only rigorous imprisonment and 7 to 10 years. One. Two is that they intend to make this predicate offense under the Money Laundering Act, so that then they can confiscate the property and put a person in jail and all those sort of things. These are the two main. Third one, of course, is also very important, is that in the earlier Income Tax Act, you had prosecution, which was compoundable, which means if you paid an extra amount of money, then they would withdraw the prosecution, you could pay. So that they said you can't do that. Now, having said all this, I think one issue which should be examined in detail is the role of the judiciary. It takes years for a case to process. Absolutely. And if you take statistics from the Income Tax Department of prosecutions which have been launched and how many have they been completed. So that is one issue. I mean, just by putting that you have to be prosecuted, may not, unless you are able to finish a case in 1 year,
may not
and say that we have completed a process.
The recovery of black money. So maybe, from a journalist perspective, what is the most striking feature you find in the bill?
See, first thing, Shailendra, is that any act which comes out of a political pressure is neither astute nor pragmatic and nor effective. The most risk which is coming up from this kind of act, which we have already discussed, this is a replication of Income Tax Act provisions, this is a duplicate act, basically it is going to support that. The risk which is coming in the mind of industry and investors, that government is unnecessary at giving extra powers to the tax authorities to reopen cases, giving them more power, and there will be more harassment in terms of this act, which should not be there. Rather than going towards the picking certain fine points of black money generation itself and making it more difficult to generate black money, making the financial transactions much more transparent would be a much better idea to do that, because these are the provisions could be the part of the Income Tax Act. Second part is that we have seen a very lackluster kind of implementation of Income Tax Act in last in the prosecution, what Mr. Joshi was indicating. So even if you make it like this, these kind of laws will only harass taxpayers. They'll give extra power to the income tax authorities and they'll start harassing people for the income tax return.
Okay, so we'll go to Mr. Misra. Sir, please tell us, there are certain safeguard provisions which have been suggested in this bill. what other safeguard provisions do you think they should have actually incorporated in this bill?
In fact, more than safeguards, again, let's
To
take
deal
a
with the
look at
issues
the
which he
lens.
was pointing out.
Yes,
let's
let's
misuse,
look at the
abuse.
dangers, the potential dangers. And as they say, God lies in the fine print or in details. If you look at the details of this provision, for instance, it is targeting not the blackest of the black money, money generated through corruption, siphoning of public funds, or acquired through illegal means, dacoity, robbery, whatever. None of these are covered. The intent seems to be any income generated outside a tax jurisdiction on which tax has not been paid. So it's a limited objective. The objective should be made wider, firstly. Secondly, it has a potential of bringing into tax certain assets or incomes genuinely earned by people who have lived abroad and worked abroad and then come back to live in India. So there is no safeguard for him.
I'd just like to clarify this issue. You see, just to clarify, it's a slightly technical point. The issue basically, when you see the Income Tax Act, it talks about residents and non-resident. Now, not ordinary. But I'll explain in this, it'll be easier to explain because mainly it deals with resident and non-resident. Right. What happens is, like in the US, a resident of the US, his global income is taxable. Unlike that, in India, what happens is, if you are a resident of India, which means you stay for 180 days or more in India in a particular year, or 60 days or you're not spend your 60 days or more in India in that particular year, then any income which is generated outside India is not taxable.
My point is, Shailendra, is that this act is basically against the spirit of free movement of capital, people and profession, which is the liberalization spirit of the legitimate free movement of the people, profession and capital. And whatever government is going to put into the place for NRIs and PIOs, who seems to be one of the most brand ambassador of Prime Minister Narendra Modi, will face the biggest hurdle from this act, because they will be the biggest target of Indian tax authorities. So if you want to make people's movement free across the world, legitimate capital should move from here and there. You already have a provision in Income Tax Act that if you have foreign income, you can disclose that.
Let's hear Mr. Somesh Arora.
He is right in some respect that they'll have to take care because there's a global movement of capital, especially money. Now the point is, many people will have explained assets abroad, which can be explained either, as he said, that you were abroad for many years and so you had an asset which is explained because you bought it from income which was outside India and it was not taxable. And as he explained, maybe somebody from India sent capital outside and got it.
Right.
But the moment you declare it in the return, it may be selected for scrutiny and you may be subject to a lot of questions.
Right.
And so in the end of the day, you may be able to prove. But the point again, which is valid, is that they'll have to take care to see that cases, which are taken up like that, are taken up with due, scrutiny.
So this cross-border things, maybe Mr. Somesh Arora will tell us a little more about this.
On this undisclosed asset also, I'd like to simply add. See, you are, in the definition you have provided, that any asset which is sufficiently explained is not an undisclosed asset. But the question is, who decides whether it's an explained asset or not? Assessing officer, I put up documents. He's not satisfied. Supposing he's not satisfied with my explanation, what follows? Number one, my asset becomes undisclosed. I have to go for litigation. I have to pay everything beforehand. I can be prosecuted. So many consequences follow. At the end, it goes in appeal. Somebody finds the explanation is sufficient. I have suffered so much. What is my this thing? Assessing officer deciding my fate, and he deciding the fate of whether my explanation is sufficient or not. And in that too, in a country where even I don't know whether my court as a black court as a lawyer is admissible expenditure or not. I talked to 20 lawyers, they give me a different kind of a thing. So we have to understand what are the complications on ground.
Okay.
And what are the safeguards there?
But now let's look at the other dimension of this black money aspect. That is the laundering of the black money.
Yeah.
Since we are talking about cross-border, we can't overlook or ignore this aspect.
See.
The laundering side, maybe you are the right person to tell us a little more about this.
As far as laundering is concerned.
How serious is this issue? The laundering through the trade route.
True. See, I do not have much confidence in the Money Laundering Act. It's one of the most ridiculous legislation we have. The way it has been framed, and more is putting up. I was part of the initial framing up when it was done in 96, 97. Since then, more and more laws are being brought in. Customs has been brought in now. Now income tax, part of it, some aspect has been brought in. Try to understand what kind of a legislation it is. Here is a legislation which says, without limit now, because since 2012, the 30 lakh limit is also gone. If you commit a schedule offence, and if a charge sheet is filed against you, that means all the agencies of Government of India, all police, because all IPC officers are virtually covered, DRI investigation, and also CBI, whatever work they do, in case it culminates into a charge sheet, there will be a parallel proceeding under the Money Laundering Act. Assets of the person will be attached, and quantum of the money which has been laundered will be one. Whatever assets he has purchased will be attached. It's automatic, 99% cases are getting attached. Up to appellate level, you hardly find any relief. All assets are attached, dispossession takes place. You are dispossessing a person now, and there's hardly any relief for him till the time he gets a free hand from the prosecution side. Similarly, now you're trying to bring in those kind of offences. You have given an example in the legislation that, okay, if you have bought some property of $5 lakh, say for example, 2 lakh was something which went from India, 5 lakh is the worth of the property which you bought, so 3 lakh is undisclosed quantum. Here, for the assessment purposes, 3 lakh will be taken as this thing. But under the Money Laundering Act, not only 5 lakh worth of property is attachable, but if you can't do it there, equivalent property here will be attachable. So, your quantum is 2 lakh, but 5 lakh worth of property, $5 lakh worth of property will get attached here. You will be dispossessed of it, and what will follow is parallel prosecution in case offences.
So we will continue with this dimension. Maybe sir will highlight a few more aspects of this issue. Let's take a short break, and after the break we will continue with this money laundering aspect and how difficult, how troublesome it has proved to be in so far, and probably there is a need for an expert panel which could perhaps look into various provisions of the Money Laundering Act and the amendments required. So we will look at that after the short break. Welcome back. We will continue with the money laundering aspect, of the black money issues. We will go to Mr. Arora. He was telling us about. So please tell us that the trade route, to what extent it is being used. In fact, even in the bill, it proposes to amend, certain sections of the Customs Act. So what implication it will have for the exporting community, importing community, and to what extent do you really believe that this will be able to make a dent into the black money demon, which is haunting everybody in the political establishment today?
See, on the customs side, what they are trying to do is bring in under-valuation, over-valuation aspects in a more stringent law and cover it in the Money Laundering Act also. But then, as we all know, the Money Laundering Act gets triggered only when a prosecution is filed. Same here, unless until for evading undisclosed income and assets, prosecution has not been launched, Money Laundering Act will not get triggered. Similarly, in the Customs Act, they have created two provisions. They say that undervaluation, overvaluation, if established, that will be a predicate offence under Money Laundering Act.
Okay.
So that is what they have done. I think there's a separate legislation which can be successful for the reason that we know it's a rampant. Almost, whatever industrial goods we know by and large, they are priced properly. But as far as trade goods are concerned, there's a rampant, in exports also we know that overvaluation is very common. Now, every time you file a prosecution, money laundering will get triggered. Very good, you have a legislation, very stringent legislation. But you have to understand one thing. As I said, money laundering is a setup of 300 officers. All kind of offences which are detected by police in which prosecution is launched. Because IPC, most of the offences are covered. Antiquities Act, this Act, that Act.
Right.
Now you're covering Income Tax Act, Customs Act. So what is the effect? Every case where prosecution is filed, a parallel investigation of money laundering is required to be triggered.
Right.
How much of staff you think you need? 70,000 to 80,000 to simply replicate the kind of work which enforcement agencies are doing. So what will happen is you don't have that kind of a staff. And you don't have that kind of a mechanism to replicate the work of all police agencies of so many states doing it, and whatever central agencies are doing it. So they will be picking and choosing, which is not good for any system or any legislation.
That brings us to the issues of this. A lot of prosecution cases apparently have been piling up in various, so far as Income Tax Act is concerned. And now, so this black money bill, again, it is going to be enforced, administered by the CBDT. So, don't you think that there need for a separate infrastructure to be created to handle if the government is really serious about prosecution business, and if they really want to make a dent into this, at least create the fear psychosis in the mind of people who are carrying a huge baggage of black money and through various channel, Hawala or maybe trade route or maybe, the carrier route, taking it across India and parking it in some tax haven. So, I mean, do you really think that to administer this successfully, now the parliament is going to pass this law, there is a need for huge strengthening of the income tax, certain infrastructure, sir?
No doubt. As I pointed out earlier in the beginning of the discussion itself, that prosecution is an important part of any enforcement organization, even like income tax or regulatory body. Now, as I said before, unless there are some judicial reforms and prosecution can be quickly, whatever cases are pending are quickly addressed. Because as I pointed out earlier, that economic crimes are not given as much importance by the judiciary. Rightly so. For example, in the income tax department itself, prosecution, how many people are actually in the process? The assessing officer himself, who is involved in so many other activities, goes through the process of processing the case for prosecution and submitting it.
Monitoring is...
So they will, if they want to, make prosecution more effective, they will also have to create an organization inside the department who will monitor and be experts in prosecution. Maybe they'll hire some lawyers also for that purpose, because Enforcement Directorate has a legal department. The tax department doesn't have it, outsources it to, lawyers who are not
apart from the prosecution, sir, we will touch upon the most vital dimension of the entire issue, and that is the reason, the generation of black money, sir. So, it's very important that, to deal with the black money issue and to ensure that the parallel economy, it goes down in size in future and more economic activities are accounted for, also to buoy up our GDP and various other macro variables. Maybe, sir, let's talk about the black money. So, maybe we will start with this, Anshuman. Probably you could throw what, as per your perspective, you have been writing on this issue for several years. Which are the sectors where this kind of money is generated more? And how this particular act is going to make a dent?
Probably what Mr. Joshi has just referred, the white paper on black money, actually white paper quote unquote on black money, has given a detailed road map of black money generation in India, and is telling the jewelers, realty sector, export and imports, lot of shell companies and other things, a lot of areas there from the black money generation is taking place. India is a cash transaction country. Most of the trade and transactions taking the cash, because your banking system is not unable to handle these kind of transactions. So the capacity and the depth of banking system is very low. There's a lot of investment taking place in the markets via different routes. So those are the areas. When this government came to the power, we were expecting that they'll come with a comprehensive understanding about the black money generation, and then there is a very minuscule part of the money which is going abroad. The most of the money which has been generated in India is consumed domestically, and that's what this is greasing out our economy. So if you keep out the whole black money part out of the system, the real growth rate would be assessed in a different dimension altogether. So that part has not been addressed. Probably government finds itself under capacity to understand this whole dimension of that. One, there's the most important part is about the political funding in India, which is major source of black money consumption.
Given the fact, Mr. Misra, that this is going to be a part treatment of the DGs, it's not really actually providing any kind of comprehensive treatment to the black money DGs. So, apart from the sources which you talked about, which are contributing to this ocean called black money, any other major source which you think that he missed out and you would like to add here?
I was actually tempted to reclassify the black money that he was saying into two kinds. There is a kind of black money, there is a grey money. There is a money which is generated through legitimate business activities, hidden from the tax authorities to escape that 30% outflow on account of tax, which is recirculated and put back into business all the time. The traditional Indian businessmen don't trust the tax system. In a country where about only 2% of the population pays tax, it feels already wronged. It feels that I am already carrying the burden of 98% of the population by paying tax here. Let me minimize the tax payment. The government's expenditure inefficiency, where 85 rupees out of 100 rupees spent doesn't reach the purpose as admitted by our ex-Prime Minister and not disputed by anybody else, also adds to that theory. The other kind of black money which is generated through illegal means, which is then not used in business activities, was mostly stored away for future consumption, which is a killer on the economy.
So, saying that the huge amount of government expenditure is actually contributing to this
it is contributing.
black money ocean.
Now, by not targeting, I would have expected a prevention or identification and killing of generation of black money and then taxation. By taxing black money, when there is a limited objective that let's catch it, get it back to the system where it will be in the control of the government to spend again.
So that leakage is he's talking about corruption dimension of it.
Which is the most important dimension. Is
Right.
it because of the corruption dimension?
So for that we have
generated?
Lokpal bill, etc. Probably that will take care of it. So, to my mind, the different forms of indirect taxes also contribute to the generation of black money. So we'll go to Mr. Arora to tell us a little more about this. This indirect taxes actually contributing to the generation of black money.
Yeah, see, broadly, I like to point out one thing. True of most of the democracies, I think it's becoming a big time. Generation of black money somehow in the corporate world is of a different nature. It's a reverse money laundering. Corporates, they have to give a big donation to the electoral at the time of electoral politics. They rather generate assets which are in cash, which is a reverse laundering, because you have the shareholders' funds and other things, white income in this thing. You will show a huge expenditure simply to generate black money, which you have to give to this thing. So there's a reverse phenomena where indirect taxes also come into because somehow you collect something and you don't pay and all that. But what is more important is that we always talk about the income side of laundering or income side of black money. Expenditure side we then do not talk about.
Okay, that brings us to a very vital issue, sir. That since you were heading that committee and you were associated with the white paper on black money also. So, what is the quantum of the parallel economy in India, sir? Of course, the government of India had commissioned this study to 3 different agencies. They submitted the reports, but incidentally, those reports are not yet out. Of course, the bill is out. We may presume that the bill. So we have not. So, sir, as per your understanding, sir, that you have seen it for 40 years, you have studied it also so closely. What could be the size of the parallel economy?
What you can simply say is how much of the GDP is generated in cash.
In cash, right.
So maybe at least 30-40%, maybe actually it's part of the cash. That's huge.
That's huge.
Now the point at issue, I would say, is that we must understand what is income tax to come back to this black money aspect. And what is income tax? Income tax is the last amount of money which is left in your pocket after you've done everything. The actual matter is that what happened earlier on. So if there are indirect taxes which he is evaded, he has to, not declare his income because he is, not paid some duties, he is not paid excise duty, or he is not paid customs duty, or he is not, that in other words, what I am trying to say, if he is violated, forget about income tax, any law, state or central law through which some money has been generated, he will not declare that money. So what it comes down to, good governance.
So in fact, this is a brilliant analysis of this thing. And if we see that and look at the bill, it looks like we are trying to kill the symptom. This bill is a painkiller actually. It doesn't cure the element at all. It only makes you immune to the pain.
Sir, I still remember one is Mr. Chidambaram when he introduced the voluntary disclosure scheme, so 97. That time the guesstimate again was that about 30% of the GDP is the parallel economy. But after that, sir, with so much of liberalization, the one presumption which I would like to make here is that, the 3 studies have done extensive work. Probably they have been able to, if not very precise to the 2 digits, but at least they have quantified the parallel economy. And that has really, made the government not to disclose it at this stage because SIT is on the job. So many other agencies are.
But here I would just like to add one thing that, we have been talking about black money, but The progress, I mean, in the last 10 years, income tax department is phenomenal in the sense, not in trying to catch people like this, but in the computerization program. Yes. They started off with 250 crores. That was the right approach to the extent that you are collecting data on people. Right. That way people comply with law voluntarily.
In fact, that is reflected in the collection.
Yeah, and that gets reflected in the collection.
So that brings it to the what the finance minister has referred to as compliance window. So maybe, sir, we can call it amnesty or voluntary disclosure. What is your gut feeling, sir, going by the provisions in the bill and a few statements by the Revenue Secretary and the Finance Minister that they are going to provide this so that the people who have made this kind of or maybe overlooked it, they have an option to comply with the law. Come forward, make the disclosure, and then you will have the immunity from prosecution and various other benefits. Of course, penalty has to be paid. So what is your gut feeling, sir, looking at a huge basket of voluntary disclosure schemes?
See, I find only one main difference between those schemes. Of course, they were amnesty schemes. This is not an amnesty scheme per se. But one main issue which will come up time and again is that if anyone comes and declares, he will definitely be asked, because in other schemes, you were not asked where the money came from. How did you earn the money? Or any other question. It was just you declared, you paid the tax, you got the immunity. Here, I don't see anything in the fine print which says you will not be asked the source. Okay. So that, I mean, issue is always there. Right. That's one issue. Second issue is that black money coming in, yes, person who's got an account in his name, asset in his name, he doesn't have much of a choice because, I mean, these things will be available in the exchange of information between countries, tax information, financial information, accounts and all that. However, if a person doesn't have it in his name, it is in the name of a non-resident or something like that. Right. There, I don't know whether that money will.
What is your gut feeling that, as per the bill, there are certain acts which have been, listed out here that the disclosure made by any tax evader or anybody having foreign account or source of income, that is not going to be construed as an evidence or produced as an evidence under certain acts. So, do you think this will work and this will be able to earn the confidence and the trust of the people who will come forward and make disclosure?
You said excise is not there, is it?
Excise is not
so
there.
That is one, I mean,
that is very interesting, and Money Laundering Act also should have been there because, it's going to run some course along with this legislation and somebody has done something that time. So, it will still be an evidence there until you put it there. Basically, they should have covered all the central acts and maybe, as pointed out, we could have said, that source will not be asked. Either you say source will not be asked or you say the more acts will be covered. Either of the two. So that is one. Second aspect which you have pointed out is what are the chances of success. See, of late, what has happened is ever since the Supreme Court says that there should be nice amnesty schemes because the people who pay their taxes honestly, they should not be penalized because once in a while you keep on bringing in. We have seen that whatever amnesty schemes have come, they've been little stringent. And because they've been stringent, now like you have 30% penalty built in it, there have not been much success also. But to my mind, it makes business sense that if you have made out some foreign asset, you are getting 40% still, all clean, all taxes paid in India, or equivalent of it. Foreign asset can be got cleaned. You are saving your skin from various legislations, various imprisonment, various kinds of tortures. This 40% with the 11-12% tax interest regime which we have, the market interest I'm talking about, will be doubled up in 7 years or 8 years. So after 7-8 years, you have bought your peace of mind. You have also had own clean funds with yourself. You are not getting tortured. I think for people who have assets, it should always be one open window which they should avail of. And then you don't forget, if supposing tomorrow the government decides that it's going to go all out for it, it still has an option after 4 or 5 years to declare it as a national asset and take away whatever you have. So you have to understand, that the government gets serious about this.
That brings it to a very vital issue, sir. The certain suggestions, one particular suggestion which has come from certain political quarters is that maybe the government of India should nationalize all foreign accounts, not disclose and report it to various agencies in India. Do you think that this could have been a simpler way of recovering this?
No, you can't do that because, now, today at least, there are so many accounts which are legitimate accounts.
So maybe
which people have, got and they are doing business. or
It has been
person
done.
is a
It
non-resident.
has been done by some
And there are many business accounts where, I mean, now even the RBI has become very liberal. You can take money, you can open an account. So you can't, I mean, and as he pointed out, there's a huge amount of capital going in and out. Money is going in and out.
So where is the problem? I mean, as per your understanding, where is the problem?
Problem is that, there's a lot of pick and chooses which is taking place in income tax department. In the black money, you cannot put a blanket law. Government does not have that much political courage to put a blanket law and say that these are all the accounts could go national, because a lot of interested parties are playing through that. So this whole amnesty thing, I don't think that the people have that much trust on the government, because when we are seeing retrospective tax cases are coming up, reopening of the cases, and government has lost, actually sorry to say Mr. Joshi, income tax department has lost its credibility in the minds of investors and income tax and global companies are very badly in last couple of years. So if the money has just got from the individual level to the abroad, they will come up. But if the money is gone from the different company circles and channels and round tripping and sort of shell companies, I don't think that companies will be willing to come. Nationalization.
Because, it is very difficult to reach out. As he said, the layering of asset has been done. If it's simply individual, he's unable to do so much of a layering. But when it comes to companies, shell companies being created, so much of a layering is done that you don't get level of cooperation from various countries. It will be very difficult.
So on this note, rather, sir, we will wind up this debate discussion, and the TIOL Tube viewers will understand that the nationalization which has been suggested by some of the legal luminaries perhaps is not the solution best suited to India. And of course, this bill, the black money bill itself, is certainly not a kind of panacea for all the ills associated with the black money phenomenon which we are confronting in India. It is going to deal with only a small part of the issue, and that is only the prevention and the recovery part of it. There are so many dimensions of black money, for instance, generation, for instance, detection, investigations, all these aspects. They also need perhaps more comprehensive provisions and also the machinery to deal with it. Mr. Jaitley perhaps will, have a second look at it, the bill, and get it examined again and see to what extent this bill itself can be, or perhaps this bill can be junked also. I mean, if a view is taken by the government that it's really not required. But whatever it is, this bill is not sufficient to recover the black money which Prime Minister Narendra Modi has promised to every citizen of this country, that his government is going to recover every rupee and penny of it from all 90 tax havens where the Indians are probably projected and expected to have their bank accounts unreported to the income tax authorities. So on this note, let me thank you all and my guest, Mr. Joshi, Mr. Anshuman, Mr. Somesh Arora and Mr. Tapas Misra for contributing to this wonderful, insightful discussion on the black money issue. Thanking you for watching us.